Hello, I'm Vanita Patnaik. I am a faculty at the National University of Juridical Sciences. Today I'll be speaking on bank fraud. Now, what is a fraud? Fraud is a knowing misrepresentation of the truth or concealment of a material fact to induce another to act to his or her detriment. And when this fraud is committed against a banker, as and when the customer lies on an application or fabricates a loan, it is called banking fraud. Colloquially, a dishonest act or a behavior through which one person gains or tries to gain an advantage over another, which results in the loss of the victim directly or indirectly, is called as a fraud. Under the Indian Penal Code, fraud has not been defined directly under any particular section, but it provides for punishments for various acts which lead to the commission of fraud. However, sections dealing with cheating, concealment, forgery, counterfeiting, misappropriation, and breach of trust cover the same adequately. The Indian Contract Act under its section 17 states fraud as a means and includes any of the acts by a party to a contract or with his connivance or by his agents with the intention to deceive another party or his agent or to induce him to enter into a contract. In India, we have majorly public sector banks, which are banks with government shareholding, as well as private banks, cooperative banks, non-banking financial companies, as well as a host of other financial companies. Banks, especially the payment and settlement ones, are particularly prone to systemic crisis. Any crisis attacking any segment of the sector has a domino effect on the rest, no matter how well structured they are. This is the reason why Reserve Bank of India keeps a close watch on the sector. In the last few decades, more so now especially, the entire focus has been on non-performing assets. Non-performing assets are non-performing loans. Loans given to the consumers of all variety are assets of the banks. They earn interest from these assets and pass on a portion of the interest to the customers of savings. So, having a particularly non-paying asset means the customers of savings in the bank get directly affected. The direct effect being the shrinking of the capital available for business for the banks. The banking industry, given the due nature of the daily activity of dealing with money, are very well supervised and regulated in India. In spite of having such a robust system of supervision and a well regulated system, it is very tempting for those who are either associated with the system or on the outside to find faults in the system and to make personal gains by fraud. Bank fraud includes a considerable portion of white-collar crime, which is being investigated by the authorities. These frauds, unlike ordinary crimes, the amount misappropriated runs into lakhs and crores of rupees. Bank fraud is a federal crime in many countries. It is defined as planning to obtain property or money from any federally insured financial institution. It is considered a white-collar crime. Banking has been defined under the Section 5B of the Banking Regulation Act 1949. According to it, banking means accepting for the purpose of lending or investment of deposits of money from the public, repayable on demand or otherwise. To understand the concept of bank fraud, we need to understand the concept of fraud and the various types of frauds and the ways to detect the same and the prevention of the same. As stated earlier, the amount of loss sustained as outcome of fraud exceeds the losses due from any other crimes put together. With the rising banking business, cheats in the banks are additionally expanding and the fraudsters are turning out to be increasingly complex and shrewd. The four most important elements for constituting fraud are the active involvement of staff, 2. The failure to follow the instructions and guidelines of the bank by the staff, 3. collusion between businessmen, executives, and politicians to bend the rules and regulations for any other external factors. Offences related to banking activities are not only confined to banks but have a harmful impact on their customers and society at large. Fraud incidents reported are related to fixed deposits, loan disbursements, and credit and debit card frauds, and are also ATM based. All these frauds show that not only they undermine the profits, reliability of services, and operating efficiencies, but can also have an impact on the society and the organization itself. With the increase in the gravity of such instances, it is impacting the profitability of the sector, and there is an increase in the non-performing assets. This rise in the NPA is a serious threat to the Indian banking industry, as the steadiness of the country's banking and financial sector determines the quality of products and services. It is also a direct indicator of the living standards and well-being of people. If there is a high level of NPA in the banking system, then it reflects the distress of the borrower and the inefficiencies in the transmission mechanism. The Indian economy suffers greatly due to these incidents. To maintain uniformity in fraud reporting, frauds have been classified on the basis of types and provisions of the Indian Penal Code, and the reporting guidelines for the same has been prescribed by the Reserve Bank of India. The Reserve Bank of India classifies bank frauds in the following categories. 1. Misappropriation and criminal breach of trust. 2. Fraudulent encashment through forged instruments, manipulation of books of accounts or through fictitious accounts, and conversion of property. Unauthorized credit facilities extended for reward or for illegal gratification. Negligence and cash shortages, cheating and forgery, irregularities in foreign exchange transactions, and any other type of fraud not coming under the specific heads as above. Some types of bank frauds are deposit account frauds. The following types of frauds are generally committed with value inflation of checks deposited, changing the nature of the checks, crossed to bearer, bearer to cross, operating a dormant account, fraudulently non-deposition and misappropriation by the agents. Some preventive steps which can be taken or considered as precautions against deposit account frauds are careful and systemic examination, procedures of the checks and other transactions, separation of bookkeeping and cash handling operations, using black light, adhesive, tapes and pathfinders to ensure the originality and to prevent material alteration. Purchased bill frauds. These are generally expensive and can take the following forms: discount on stolen or fake railways receipts and motor receipts, along with other necessary bills. Forged fake bills with inflated value drawn on sister concerns are discounted. Fake forged bills of valueless goods are discounted. Some preventive steps which can be taken or considered as precautions against discounting of the bills fraud are examining the receipts properly and strictly by confirming from the concerned authorities. In case of auction, inform the authorities regarding the interest of the bank in the property so as to get information in case of non-collection of goods. Establishing a better connection between the purchaser and the seller. In case of dispatch of proceeds, strict examination before discounting of the bill. Hypothecation fraud. Cash advances against pledged goods as security a fertile field for frauds. Unauthorized removal of hypothecated good from the godowns. Some of the stocked goods in large quantity may have less value inflation of stock. Statements of valueless and meaningless stocks are offered as security, hypothecating the same goods in favor of different banks. Some preventive measures which can be considered as precautions against hypothecation fraud are strict examination of the bank representatives and borrowers' credentials, only marketable goods to be accepted as security, proper evaluation of stocks, verification of statements of stocks, loan frauds. The following types of frauds are generally committed: two different persons taking loans on the same item or product, people taking loan without providing actual address and disappearing at the time of repayment, loan taken for one purpose but used for a very different purpose. For example, loan taken for agriculture but used for personal purposes. Borrowing is denied when the particular person is alleged of non-payment. Some preventive steps that can be considered against loan frauds: proper verification of documents and the purpose for taking of the loan, including the local authorities as to verify the authenticity of the loan purpose, and authentication in case of a substantial amount of loan is taken, it should be checked by the competent authority. Data leak frauds. To provide efficient and fast service, most of the branches of the banks, except the ones in the very rural and remote areas, have been computerized. Not many frauds relating to computers have yet been reported so far, as computerization in Indian banks is of a recent origin. But in the Western countries, where virtually everything is computerized, a large number of cyber crimes in the banking sector are reported on a regular basis. There is a need to analyze the nature of such crimes so as to appropriate preventive measures which may be devised. Normally, following the types of frauds are committed: spy software is devised by the cyber criminals to crack the passwords. They enter into the computer system of the banks and manipulate the data to transfer the money from other accounts to a different account. Computer virus is created by the mischief mongers who find a way into the computer system by way of emails. These viruses destroy the data stored in the computers and slow down the entire computer system. It is sometimes alleged that the manufacturer of antivirus software themselves create viruses so that their products may be sold in the market. Hackers are computer experts who steal passwords and access the classified information stored in the computers. They do not even fear to raid the government departments, including military establishment, to carry out the nefarious designs and to destroy and mutilate the data stored in the computer systems. Such acts are committed normally not for any material gain but to derive a satisfaction out of sufferings. Wiretapping is a crime committed by tapping the wire of the ATMs of the banks to withdraw money out of other persons' accounts. The fraudster in this case attaches a wireless microphone to the telephone line connecting the ATM with the bank's computer and records signals through the wiretapping while a customer is using the ATM. These signals are later on utilized for withdrawing money. The Government of India enacted the Information Technology Act in the year 2000 to provide for punishment and to provide penalties in respect of frauds committed in respect of computers. Section 43 of the said Act provides for hefty damages up to rupees 10 lakhs payable by the offender to the person affected in case there are unauthorized acts committed in respect of another person's computer system. like access or downloads or taking copies of the information or data stored, introduction of computer containment or computer virus, damages to the computer or its system, etc. Further, the said Act also provides for punishment with imprisonment up to 3 years for tampering with computer source, documents, and for hacking the computer systems. Now let's speak about check frauds. Check frauds constitute the biggest volume of bank frauds. This crime is done in the following forms. Checks are stolen, filled, and signed spuriously and encashed. The signed checks are stolen and are encashed with alterations if required. Checks issued by organizations for employees are duplicated, alteration of checks to increase the amount or to change the beneficiary or to add an additional beneficiary. Check kiting. Check kiting exploits a system in which when a check is deposited to a bank account, the money is made available immediately, even though it is not removed from the account on which the check is drawn until the check actually clears. Some preventive measures which can be considered as steps are: the instrument must contain a proper date, the check must be checked thoroughly, and the character should be verified, checking the signatures which should be genuine, the amount should be checked that it should be written in both numerical and words, checking the check kiting. Now let's speak about dishonor of checks. Dishonor of checks or check bouncing is a very serious problem, and it is becoming even a bigger problem. To cope with the issue which was affecting the smooth business transactions, the Government of India has introduced Negotiable Instruments Act 1881, which provides for provisions to deal with cases of check bounce under sections 138 to 142. The Supreme Court of India also has provided some landmark judgments which also provide with new guidelines on dealing with check bounce cases. This has been recognized as a criminal offence with the burden of proof being on the accused. Though not strictly a banking fraud, it does consume huge resources of the public sector as well as banks in dealing with this. One of the primary reasons which can be attributed is the practice amongst the business community is the acceptance of the post-dated checks. Post-dated checks, or PDCs as they are otherwise known, are useless pieces of paper until the date of demand arrives. It is only then the cause of action arises. As per the Negotiable Instruments Act, this instrument has been rendered non-negotiable by the RBI in an attempt to stem the number of bounced cases in vain. Finally, let's speak about the credit and debit card frauds. The introduction of plastic money also brings its own share of woes. As more and more people use them, there are more and more chances of fraud in this sector. Data protection is at its flimsiest here, and this is where it is required the most. This can easily be elaborated by the recent outbreaks from time to time. In 2016, one very early morning, the whole nation woke up to the news of debit card of various banks, including State Bank of India, being compromised as per the National Payments Corporation of India. Some 90 ATMs were impacted and some 641 customers lost around 1.3 crores in fraudulent transactions. The Council of Payment Card Industry Data Security Standard, an international body that sets data security standards, ordered a forensic audit on banks. Banks have been advised to their customers to change their PINs and to confine themselves to their own bank's ATMs, leaving the customers worried about how secure the debit and credit cards really are. The Reserve Bank of India and the banks are trying to stay one step ahead by introducing several security measures and features, including chip-based card, two-factor authentication. However, card fraud basically involves theft of identity or information on the cards. This information is then used to make ATM withdrawals or to conduct online and offline transactions. The various modes of credit and debit card fraud are abuse of genuine cards. The genuine cards are stolen while in transit from the institution to the user or from the owners, and sometimes the card is stolen and there is a misuse of stolen cards. Even in some cases, the card holders falsely report about their card being stolen and go on a shopping spree before the acquirer bank suspends the transactions or blocks the cards. Altered cards. An altered card is a card which is original, only which has been altered by the fraudster by giving a new name, and it replaces the signature strip. Also, he gets a genuine account number from a banker. It is very abnormal and can damage the security features of the card provided by the bank. White plastics. The duplicate fraudulent cards are called as white plastics. They are the copy of the original genuine cards. They have pictorial similarities but don't have any of the safety features. Impersonation frauds. These are also called application frauds. The fraudster assumes the name, address, and collects the card belonging to a person. Some preventive measures that can be considered are speeding up the transmission of the information about the stolen or altered card through a dedicated website, appointing of trained operators to recognize and differentiate between genuine and original cards, monitoring the working of the sale terminals periodically to detect unscrupulous merchants. Conclusion. In conclusion, in a bid to keep pace with the changing times, the banking sector has diversified its business. This has caused a dent in the credibility of the system in terms of the control and supervision. Many a times, public funds are squandered in the guise of commercial decisions. Replacement of the philosophy of class banking with mass banking in the post-nationalization period has thrown a lot of challenges to the management in reconciling the social responsibility with economic viability. According to some of the reports, there are various cases on bank frauds. Bankers often exceed their discretionary powers in allowing credit facilities to certain clients, which results in non-performing assets. They feel that factors extraneous to the banking should not be allowed to influence the decision-making process of the bank officials, even in case of valued customers. Since banks have a clear-cut delegated financial power, sanction of credit facilities strictly in terms of prudent banking norms should be ensured. A large number of bank frauds also take place on account of active employee-outsider partnerships, in which bank staff concerned facilitates the crime and are often left undiscovered, are the undiscovered beneficiaries. Such cases are more difficult to track down, particularly when they are targeted for operation and are different from that in which a guilty staff is officially working. The dividing line between operational neglect and the perpetration of fraud is rather thin. The financial systems and the very large financial resources are drawn from public money are to be protected. The occurrence of a fraud, big and small, has to be stamped out. Analysis and concerted application of controls by the bank managements and their operational staff would go a long way in stemming the rot. Every law regulation has ambiguity and loopholes for criminally minded to take advantage of. The role of insider in banking fraud, however, is pernicious, and it may be easier to stay. For one detected case, there can be numerous instances which remain undetected. Constant vigilance may reduce the frequency and magnitude, but complete eradication is just not feasible. At least in India, under the present social and political and economic set, these frauds are now becoming more and more frequent and can be considered as one of the main reasons for damaging the economy of the country. And with such high profile frauds happening all over the country, it has become necessary to put a check to these activities and, if possible, to create a more stringent legislation to deal with these issues. Sticking to the rules and eternal vigilance is the basic preventive measure. Thank you.